Very good evening to everyone. Thank you for joining us for our ASEAN Investment Challenge webinar. Apologies for last week. I think we have some technical issues, so we have to postpone it to today instead. All right. Anyway, this is our fourth webinar. All right. So today we will talk a bit more on a bit more practical in the sense on how you actually can take some of those things that you have learned and put it into practice. So I have with me my colleague here, Viren. Viren, you want to say hi?
Hi, good evening, everyone.
Yeah, so Viren will be guiding us on the technical front. I think I will do a bit on in terms of some introduction on some of the fundamentals and some examples on how to pick some of the stocks based on fundamentals as well as on the key trends to look into. So once I'm done with that, I'll pass the time to Viren. For those of you who do not know who am I, I'm Billy To. I'm the Regional Retail Head of Research at CGS International. So most of you are joining us probably are already part of the participants for our ASEAN Investment Challenge. I hope that you've been trading and doing well so far. The market has been pretty bullish, so I am sure a lot of us have been doing pretty well. Challenge is to outperform the benchmark as well. Right, let me just share the session. Okay. Okay. Can you all see my slide? Are you able to see my slide? Let me just see.
Yes, very clear.
Okay, thank you, Viren. So today's topic is on from theory to portfolio, your first investing game plan. So it's hopefully something that is suitable for you guys. Well, basically, we're gonna practice some of the things that stock market is a device for transferring money from the impatient to the patient. So we'll be focusing a bit more on the fundamentals, and my colleague Viren will touch on all the technical stuff later on. All right. Just a disclaimer, this is not a webinar that talk about stock recommendations or anything. Basically, we are just on education and awareness, right? If after the session you wanted to invest in certain stocks that we've mentioned, you probably want to talk to a financial advisor to see if the recommendations fit into your risk as well as your portfolio. All right, just a quick recap on what we've done so far. I think we've talked about some of the biggest myths about money at the start of it. Basically, it's not about being rich to invest, but it's about investing to build that wealth of yours, right? To get rich in the longer term or in the near term, depending on which strategy that you're going to play, right? And then, of course, to stay in the game, investing is about managing risks in order to stay invested in the long run. We've talked about, investing is more so about being in the market rather than trying to time the market all the time. And of course, for those of us who are a bit more busy with our lifestyle, or if you're probably more afraid to invest proactively, one of the ways really to look into ETFs and set your investment into an auto mode so that you can grow your wealth in the longer term. Right, but what if you want to be more proactive, right? So I think that's what we want to talk about more today, that you want to be more, we want to focus more on what you need to know, how some of the things that you can actually learn and gain from other sources in terms of information, a certain strategy and rules that you want to follow so that you don't fall into a habit of over investing or over trading, right? And then of course a system that helps you to sort of track and review how you've done so far. All right, so just a pulse check, just a quick one. For those of you who are on our live, just if you have, you can probably just type in the chat so that to let us know whether you have invested before with your own savings. I know that the AIC tournaments allow you to use, 100,000 to actually invest in the market, but that's a virtual money, right? It's very different from when you're investing with your own money because a lot of emotion is involved, especially if you invest in your own hard savings, right? So have you been using any trading strategies? Is there any methodology that you're looking at when you invest? Feel free to put it down in the chat to share with us so that we know what sort of principles and technicals that make sense to you. All right, so let's jump into it. So first of all, I think before you start investing, the first thing is really to set your goals so that you know what you want to look at when you're investing. I guess the type of goals that we are really talking about is whether it's for wealth building, whether you're talking about investing for your retirement. So a lot of these are more longer term time horizon, right? And then of course, whether you are investing for your education fund, for your children, for your kids, it might not be so relevant to the students here, right? Or whether it's for down payment and you wanted to buy a property or whatever, right? Especially those who are in countries like Singapore and all that, which is probably harder to buy property given the prices and all that. So these are things that you want to look at. Or maybe it's just the AIC challenge that you want to win, right? So when you look at it, all of these type of goals have various different time horizon. Some of them are very short, like the AIC challenge is probably just two months period, right? Then your trading time frame is probably less than 1 year for some of those of you. But for the longer term, like wealth building is probably more than 5 to 10 years. Your retirement is probably about 20 years to 30 years, that sort of level, right? Education fund can be up to 7 years. So basically, you have your short term, your mid term, and your long term. Usually, we classify short term as below 3 years. Those medium term range is between 3 to 7, and anything more than 7, we are looking at it on a longer term basis. So it's really a lot about savings for retirement or buying a house in 5 years, or it's about trading to take advantage of how some of the market movement, especially when you leverage on some of the trading technical strategies that Wei Ren will be sharing later on. Secondly, before you take that jump or take that move to invest in, know your risk tolerance, because everyone is very different, right? I think some people can really tolerate risk, and it has various factors to take into consideration. So these various factors includes your age. So if you're younger, most likely younger investors can tolerate a lot more risk. So if you talk to a lot of young investors today, they talk about crypto, they talk about multiple fold returns. It's because they know that they have that, period of time that they're young, they can actually take on some of the more risky assets. But of course, I would suggest investors to take into consideration a more balanced risk approach, right? But it really varies, depends on your age. If you're older, so for example, if you're near your retirement age, then you probably don't want to take so much risk, and you probably want to invest more in things like money market funds, or even like your bond markets, or whatever, right? Then of course your income stability, I think that's very important. I remember personally myself, when I started investing, it was when I was 19 years old. So, but back then I was able to invest because I got a scholarship money. So I have a big pool, not big, a certain amount of money that I can invest in. So that's how I started off. And I was giving tuition I was working as a part-time tutor. So I was earning a regular stable income. So that allows me to invest and start my investing journey. So for someone who's not working, it's probably a bit more difficult because your cash flow is a bit different, right? Then of course your investment knowledge. And I think the more you understand about the markets, the easier it is for you to stomach some of the volatility, right? For people who are more familiar with the market, even if let's say it dropped by 5 to 10%, you might not be as worried. But for someone who's new to investing, any market movement might trigger a sort of decision making from your end, right? Now, of course, personality is also another factor. Some people are naturally more nervous, right, about things. Some people are naturally more calm. So those are things that you need to look into before you make that first move. So now basically I will categorize it into 3 categories so that it's easy for us to recognize whether you are conservative. In terms of conservative, are people who are just looking to prioritize capital preservation and to accept lower returns, right? Those are moderate. You're probably more balanced between growth and income. So you're looking at a bit of growth stocks or growth assets, risky assets, as well as a bit of dividend play. So you're probably a bit able to tolerate if, let's say, the market move about 3 to 6% or whatever. But you probably might not be able to stomach that sort of volatility if it jump by 20-30%, right? So for those who are more aggressive, you're probably looking at high growth. That's what you want. You want to accept large return despite of the short-term swings that there are in the market. So you got to understand what sort of characters that you are before you make that decision. Got some simple self-assessment here for you to take a look at. Is you can do this, and it's a very practical steps. If you ask yourself this question, if your portfolio dropped by 20% in a month, what would you do, right? Are you going to sell immediately? Or are you going to type the hold and wait? Or are you going to buy more, right? So you will more or less know what type of person you are, or how soon you will need this money, how long you can put your money into investing, how comfortable are you with big market swings, and which matters more, whether you want to avoid losses, or whether you're someone who look for balance between safety and growth, or you're someone who really want to maximize growth, right? So to simplify things, if you're someone who are choosing most of your answers A, right? If you sell very quickly, if markets drop, or if you need your money very quickly, you can't really put into investment for a long period of time, or you're very uncomfortable with some of the volatility in the market. Let's say if it goes up by 5-10%, then you'll be very panicky. Then you're probably more on the conservative side. But if you're someone who are in between of this, then you're probably a bit more moderate. And those are more aggressive investors who probably wanted to take advantage to buy the dip. Let's say it dropped by 20-30%. You want to continue to reinvest. You want to double down your investment. So you have a clear guide in terms of what sort of investors you are, right? Now, thirdly, I think this is quite simple. Basically, you need an investment account to do so, right? I guess if you don't have that, it's a bit hard for you to invest. Now, there are a few types of accounts. Just going to quickly go through that into brokerage accounts and robo-advisory. I think this is quite new. A lot of people are looking into it as well. Like instead of trying to look into the market on your own, you can actually invest in a robo-advisory that helps you automate some of this investment. So for brokerage accounts, it's basically quite straightforward. You basically open it and you can own the account and have full ownership of it. So you make the decisions when to buy, when to sell, and stuff like that. So what you need in general is pretty much similar to when you open a bank account. But I guess the tips here is when you look at a brokerage account, one of the few things that I personally encourage investors to look at are your fees. I think that's very important. If it is too expensive, then it will eat into your trading portfolio, especially if you're trading a lot, right? And of course, the platform ease of access. Some platforms are a bit difficult to use, right? Personally, CGS, our iTrade is quite a recognized platform that investors and traders are comfortable with. And of course, market access, right? You want to be able to trade in markets like Hong Kong, US, Malaysia, Singapore, and those that gives you a lot more access so that you have that option to choose where you want to invest your money in, right? Okay, I think that's the easy one. Now, pick your first stock or ETF. I think we start with ETF because ETFs are easier. So usually when I look at ETFs, I will look at those in terms of I will be focusing on the cost of ownership in terms of how much does it take to invest in the ETF. Usually ETF, the costs are significantly lower than funds because it doesn't require an active fund managers to manage the portfolio. So what is ETF? For those of you who do not know, I think we talked about it before. ETF is basically an instrument that tracks on some of the benchmark indexes. For example, if let's say the ETF that tracks S&P 500, whatever stocks are in the S&P 500, that's what your money will be invested in, right? But instead of investing in in the entire amount of each of the stocks, you can actually invest in, say, a certain amount into the ETFs, depending on the prices of it, right? So why it works is because ETFs are very easy. Instead of trying to see what stocks are good, you are basically buying the whole market, right? And it allows you to do so at a very low cost, like I talked about. You can have an instant diversification, and thirdly, it's time tested. So if you look at the S&P 500, for example, over the last 10, 20 years, I think returns is more than 10% on an annual basis. So it's very, very good returns, right? It significantly surpassed your inflation rate and a lot of other investment in vehicle as well. All right, some of the ETFs to know, the more popular ones. So basically, your S&P 500 ETF trust, you can look at SPY. It tracks the 500 largest US companies across all sectors. So that's basically what the S&P 500 is, right? So it allows you to invest in the biggest names in the biggest market in a very easy manner, right? So this is something that a lot of investors will look into, especially for those who just started off investing. So it's very easy for even people who are not familiar with the market to get started. Then your Invesco QQQ Trust is basically tracks the Nasdaq 100. It's a bit more risky because it's heavily weighted in technology. But I think I talked about this before, and I think it's very important is that in today's market, I think we are living in a very different era. Unlike in the past, where growth is driven a lot by the older business like your construction and other business mode. Today, technology plays a very important role, especially with the rise of AI. And I think it's just at its early stage of growth. We are at a point where all the infrastructure builders of the AI technology, like your NVIDIA, your AMD, and all the chip makers are really benefiting it firsthand because you're starting to build that, right? Then, of course, those data centers and all that are also benefiting because they house all these infrastructures. They help to connect that bridge, right? And then, of course, your software developers, your OpenAI, your Microsoft, the likes, all this will eventually come in as well. So we are at a very early stage of it. And personally, I believe so. So these are opportunities that investors can take advantage of. Instead of trying to test which is the winner in this rising trend, right? You can just invest in an ETF that allows you to have that. Then, of course, you have your Vanguard Total Stock Market ETF. This is basically for people who just want everything, right? So you just buy the entire US market, whether it's large to small caps. Personally, I don't advise this, but it's something that you can opt to do, and it's quite a popular one as well. iShares Russell 2000 ETF is also another one. So this one is basically focusing on US small cap stocks. Now, just to let you guys know, right? I think some people don't understand why you want to buy small cap stocks instead of the bigger names, right? So it's because when a company is small, the growth level is usually higher because let's say you are only earning $10 million. It's easy to build that 10 million to 100 million, right? That growth is significantly higher, right? But for companies that are earning like 500 million, it's probably a bit hard for them to grow that 500 to 1 billion, right? So that's where the small cap stocks make sense for investors who wanted to invest in things that probably offer a higher growth potential, right? Then you have your Vanguard Dividend Appreciation ETF. I think these are investors who wanted something that's safer, right? You wanted dividend, so you can actually invest in this, which actually track companies with a record of that have a lot of increasing of their dividend over time. So one of them is Coca-Cola, right? So Coca-Cola have been increasing their dividend over the last, I can't remember the exact year, but it's more than 50 years. So it's a lot, meaning that every year their dividend grow from year after year. So consecutively for more than 50 years. So that's it shows that the companies are very resilient in terms of their earnings, and they also consistently reward their shareholders. Then of course the next one is also on dividend, but it's a bit more different in the sense that it invests in high dividend US companies from the S&P Composite 1500 index. So it's a bit different, but it's still, it's a bit different, but it's very relevant in terms of for investors of the same characteristics. So what about stock picking? I think it's important for investors. Personally, I only invest in companies that I know, right? So for example, if a company just IPO and I had no idea about the company, I don't invest in it. So not sometimes, I do miss a lot of times. The opportunities that come across, sometimes you miss that. But I think it's important because then you won't be putting money into things that you're unfamiliar with, or taking unnecessary risks that could, because to me that's the difference between investing and gambling, right? So that's how I would encourage investors or you guys to look at companies that you already know. And if you want to invest in that company, find out about the company in terms of their business model, what is their business strength. So I always ask a few things, right? What is their strength? Then what's their weakness? Where are the opportunities? And then of course, where are the weaknesses? So where are the peers, the competition? So those are questions that you need to ask, right? Then of course you have to check the basics like your revenue growth, how is it doing, profitability, and of course other growth drivers like your valuation and some of the risks that you might be facing. I'll give some example later on so that you can relate to it rather than just hearing it from a theoretical perspective. So I'm going to take a company that I talk about quite often. I think I've been talking about it since Nadella become the CEO at Microsoft. So I talk about it for a while now because I think the company has a strong business model and a strong structural growth and plan to reach the goals that they have set for the company in the long term. So for those of you, I'm sure a lot of us are familiar with Microsoft because we all use Windows, but a lot of time we only think of them as your Office, your Word, your PowerPoint, a lot of the boring stuff basically, right? But it is also because of this boring stuff that allow the company to be so resilient in terms of, because their offerings are things that people don't usually change. So for example, now the new growth that they have is cloud services. Azure, for those of you who do not know, is basically where, for example, OpenAI uses Azure for some of their logic to run, so that, in order to do that, you need cloud services. So that's where Azure is. You don't really see it, but that's where it houses all your data centers, you're on the cloud. So you wanted to save your stuff into the cloud. We talk about that as if it is really in the cloud, but there is an infrastructure that is in place and is provided by companies like Microsoft. So that's why it's important in the sense that their business is resilient, right? Then of course the software, the ones that you're already familiar with, like your Office, your Teams, your Windows. So if you look at it, a lot of corporates still use Microsoft today. I know we complain a lot about the software, right? A lot of times you say, hang again, right? Oh, there's the blue screen and all that. But it's a fact that the companies are the ones that Microsoft services are the ones that offer that sort of back compatibility, and it's very important for a lot of corporates to do so because you want your software to last for a long period of time. So there are challenges, there are weaknesses in it, but the support is there, and you can see that most corporates do not change when they're using Office. Most of them don't change from Microsoft Word to your Google Suite, although they are, but the numbers are not that high, right? Then of course, the latest are your AI integration. So I think this is very important because a lot of times I think we've seen AI a lot on news headline and all that. So what does it mean, right? So for Microsoft, they partner with OpenAI, but not only that, they partner with OpenAI, they also leverage on a lot of other AI technology like your Grok, I think Google, I can't remember what their AI is called. So basically, a lot of them are integrated well into Microsoft services like your Azure is part of it. So there is a lot of integration within the ecosystem. So that allows companies, once you're using it, it's very hard for you to change actually, right? So most likely, and a lot of the business model that they have today are based on subscription model, meaning you pay a certain amount of money every month, right? So maybe I'm just paying like $30 every month for these services. And $30 is not very little, but it's also not a lot. So it's basically like you buying your Netflix, but it's for businesses, right? So you keep using it. And of course, gaming is also another one that they have. So you have your Xbox. I think they recently buy over Activision Blizzard. I think this is also another area of growth that is very much underappreciated. But so this just some of the things that the company is doing, right? So like I said, the first thing you need to know is you need to know what the company is, what they're doing, what their strength is, etc. Right? So these are things that you need to be familiar with. Some snapshots on their data. This is already outdated because prices have moved. But as of 30th July, I think it was at around $513. The market cap is at 3.8 trillion. It's below Nvidia. Nvidia now is the largest company in the world in terms of market cap. Microsoft is second. So in terms of, you can see the price range over the last 1 year, yes, jump up quite significantly. So it does offer dividend, but it's not at a very high level in terms of yield. It's only at about 0.5%. But for companies with the kind of growth that they have, it does make sense, that dividend yield is a bit lower. Now, let's just look at some of the things that they've announced so that you know what to look at when you are investing. So, for example, they've just announced their revenue of 76.4 billion, gross margin of 68.6%. So I can talk about all the numbers that, and it probably doesn't mean much to you. But the key thing is this: when you look at a company, especially on the stock market, is that how does the company's earnings reported do according to expectations, because that's very important, right? A lot of times your share prices are moving according to expectations. People expect Microsoft to grow at, say 15%. So they are already expecting it at that level. And then your analyst will do a valuation and then come up with a certain target price for the company. So those are expectations based on that, right? But if your earnings are better than expected, so usually your share price will move. So these are very important for short-term traders. So you probably want to understand how this will affect your share price movement in the near term. So it's very important. A longer term basis, I think investors need to look at the track record of the company. So like if you look at Microsoft, since Nadella took over as CEO, the company has been growing in terms of their revenue, but not just growing on revenue and the bottom line. More importantly is the growth that is coming from those that are very important industry, like your cloud, your AI and all that. So this is why I think the company is good to invest in. And if you look at another key area that I usually look at is the free cash flow area, which allows me to know how much flexibility the company has in terms of investing, or in terms of let's say, for example, there's a recession, or there's a sharp slowdown in the economy and stuff like that. So these are things that I look at. And of course, your key growth drivers, what are driving them, right? Like I talked about earlier. So Azure Cloud is driving Microsoft 39% year on year at constant currency, outpacing high expectations. So the expectations are already very high, but 39% is even higher than what was expected by the market. And more importantly is that if you compare Microsoft, Amazon, and the likes who are offering the cloud services, the Microsoft has the fastest growth. But of course, Microsoft is not the biggest. Microsoft is second in terms of market share. The biggest is Amazon. So they're closing up the gap. So that's a positive sign. And then your 365 commercial cloud, I can talk about it. It allows investors, it allows a sustainable recurring income, because every month you have to pay a certain amount for that, So a lot of corporates consistently use that. So this has helped to boost their earnings, and they're allowing a lot of integration and synergy between the products that they have, like your Copilot, a lot of different AI solutions that they have. So they're actually integrated within the ecosystem, allowing a lot of flexibilities for enterprise. Then gaming, of course, I think is a boost from some of the first-party titles and Game Pass that they're announcing. Game Pass is also very much similar with Netflix, so it's also a subscription model. So they're changing a lot of their business to subscription model as compared to in the past where you buy one off, right? Then, of course, like I talk about the AI integration portion. All right, forward looking, it's also another thing you want to know, because what you're seeing in the reports are all historical earnings and things that are of the past. So you also want to look at what's going forward, right? So these are how you really look into. But before I continue, let me just look at a question. I think there's a question on, does investing in technology do us well now? Because I have heard that it is very risky. Okay, I think it's too general, because when you say technology, it can means the, whether it's AI business, or whether it's companies that do memory chips, or whether it's companies that are in services So a lot of this are very different. Some AI companies will also be disrupted. Sorry, some technology companies will also be disrupted by the AI solutions that are being offered. So it really varies depending on what you're looking at. But I would say that the structural growth story that I talk about, like for AI and all that, are true because your adoption level is very high, significantly. I'm quite sure that because recently I've gone to TikTok Live to see how some of the Gen Z people interact, and I realized that the Gen Z, a lot of them do use AI solutions like your ChatGPT, etc. So we are seeing that growing. So I think that is the trend is here to stay. But of course, the older business might be affected. So you need to know again what industry or what particular services that they're offering. Can China's equity rally broaden from tech to other areas? Actually, yes. And in fact, I would say that the China equity rally is not just in the tech at this point. We've seen a lot of growth in other areas as well. So like your pharmaceutical, your biotech, those have already done very well in China as well. So it's not just the tech players that are doing well in China. So the tech players are seeing a sharp recovery from what it was prior to this. I think the tech players in China have struggled quite a bit over the last 5 years or so. But this year we've seen a sharp rebound and recovery from in that area. So that's partly why. But your biotech is also another area that China is already doing very well. So it's not really just the technology players that are doing well. Okay, I'm just gonna continue it for a while. Right, so in terms of forward looking, if you look at Microsoft as a case study, so these are some things that you want to ask when you're looking at a company. Like, do you want to look at what are the guidance that the management are providing for your revenue, for example, right? You want to see whether the guidance that they provided is better than what the market was expecting. So these are very important because usually markets, the analysts, usually they will ask around and have a rough idea on how the market, how the companies will do going forward, right? So if let's say the management provide a better guidance, it's usually indicates that the companies are going to do better, right? But it's also very important to take note of one thing is the track record of the guidance provided by the management. I think it's very important because if let's say the management has been very inconsistent about their guidance, then it's probably not worth tracking on that portion. So do take note of that so that you know whether the management provided guidance that are reliable, something that you can rely on in making your decision, right? So for FY 2026 for Microsoft, they're looking at double-digit revenue and operating income growth and margin remains stable. So I think this is very good because, like I said, you want company that continues to add value, right? And companies that add value tend to have, investors who tend to do well in terms of their earnings because your customers will continue to subscribe to their services. Then in terms of CapEx, how much they're spending, how much they're investing. So CapEx basically what you do, where you invest your money in. So they're investing about 30 billion in the first quarter of 2026. That's what they're guiding. So this is lower than what it was in FY 2025, which is a good thing because there is one concern about companies, especially the tech companies that are investing in AI. Are they over investing in it? So it's something to take note of because I think back in the dot-com bubble, back then there was a lot of companies that also talk about investing in, a lot of different stuff, but whether it really adds value or not, not all of them are. And when the dot-com bubble burst, we've seen only those who have done real business continue to remain resilient. So it's very important to make sure that the capital expenditure that they do are at a level that is manageable. Right, valuation snapshot, I'm just going to talk a bit on that. If you look at it, it's trading at about 33 times P, which is considerably expensive. But, if you compare to the entire industries, a lot of the valuation has gone up because markets are a bit more bullish. So usually valuation is a bit tricky because it depends on the market sentiment, the economy, the environment, and all that you are in at that point of time. So usually when in a market that is doing well, people are more risky, right? You want to take more risk, so your valuations are usually higher. So those are things that you wanted to take a look at, right? So the target price basis is basically because Microsoft is a play that, if you want to talk about AI, that's where people look into one of it, right? Because of its partnership with OpenAI. But of course, there's a risk to it, how the partnership would affect them in the longer term. So those are things that you probably want to take a look at as well. Yeah, like I mentioned, right? The risk to watch your partnership with OpenAI is one of them. Then, of course, there is a lot of scrutiny in terms of how AI is going to affect consumers. So those will affect them as well. Because if, let's say, the laws are passed that affect them, then things might not be so favorable in terms of how they're going to run the business. So there is also a lot of competition in this area. So you can see Google, Facebook especially is invest a lot in AI. They've been hiring all the AI engineers. So these are things that you want to take a look at, right? So of course, how your tariff will affect the overall economy and whether there will be a sharp slowdown in the economy that will impact enterprise spending, because Microsoft, a lot of their clients are more business to business. So you will see a slowdown. So they are not immune to recession, let's put it this way, right? Right, investor takeaway, I think the key thing would probably be Microsoft has continued to deliver so far in terms of the earnings, and you've seen it. The margin is stable, it's strong, it's good margin. And then the cash flow is also very robust, and the sticky subscription revenue make it a very good long-term investment play. Because I've not seen a lot of people, and when we look at research and all that, we've realized that not a lot of people actually would drop their subscription once they jump into subscription like in Microsoft. And not only just Microsoft, even your Apple, right? If you've already subscribed for your cloud, right, it's unlikely that you will drop it off later on. So these are things that tend to be very sticky. But do watch out for valuation and regulatory headlines, because if there is a sharp, let's say there's a war or whatever, so those things might trigger. So do take note of all these things. Right, so if you want to look for target price, some place to look at, especially for investors who do not have access like myself. I mean, we all have a lot of different access than a lot of retail investors. So one way to look at, you go to, Wall Street Journal is one of those, especially if you're looking at US stocks, right? So you can actually see the consensus view, like, what's the average target price that you're looking at. Let me just point it to you. Then of course, whether the low level, the median level, the high level. And of course, you can see from 3 months ago, there are 47 people who say buy call, right? Then now there are more people who are optimistic about the company. So these are things that you can look at, right? So these are for people who just, if you don't have as much time to do your own valuation or your own investment research, so you can actually take advantage of this. Or you can also look at individual research houses. So for example, we provide a lot of research to our clients, whether it's through Telegram, whether it's through a research portal. So you can actually look at what are the stock ideas that we have, the target price, the basis, what we are looking at. So this will help you to make an informed decision. And then of course, last but not least, your own analysis and valuation. Right, so deciding how much or how often to invest is also very important, which is the next step after what you've decided in terms of your stock. So basically, either you do it lump sum or you can invest in DCA. DCA means you invest on a regular basis. Instead of one lump sum, you invest $1,000, you probably invest $200 every month, right? For the next 5 years or so into a certain specific stocks or ETFs that you are interested in. To be fair, there is not much not to say there's not much difference. It varies, depends on your investment horizon, like how long you want to invest, of course your goal as well, what you want to achieve by that. So for example, when I got my scholarship money, because I have a lump sum of money, so I actually put in the entire money into investing directly, right, rather than waiting for this year. So for this year, I actually use it, invest savings that I have from my income minus off my expenses, and then I use it for investing. So that's how you should strategize your investment in terms of how much you want to put your money in. And then review and adjust your plan. I think it's very important. A lot of time we miss this part. After we've done the investing, we don't do a review. Again, too often when you review, if you are reviewing it too often, it's also a bit negative, because then you might get panicky and make decisions that are not beneficiary to you. But not reviewing it for a long time is also bad, because then you don't know how your portfolio will turn out, right? So one way to do it personally is that you should review it at least annually for long-term investors, right? Like I mentioned, if more frequent reviews are probably more suitable for those who are looking at short-term trading strategies, which I think Wei-Ren will highlight a bit on later. So if for myself, I look at it on a yearly basis. Why it's important? Because say example, you are investing in 50% in tech stock, for example, right? Then 20% in consumer stock, and then another 30% at others, right? But if let's say tech stocks were to jump by 50% or 100%, then your 50% allocation would have increased, meaning that your risk will go up because you're already investing more in tech companies. So the idea is really to review and adjust according to your risk appetite and what you're looking at, as well as the market trend. Right, just the last one is basically just to recap. So you want to look at your goals, you want to check your risk tolerance, you want to open an account, then you want to check whether the first stock or the ETF that you want to buy into, what are those, and then the amount and the frequency that you decide to invest in. And last but not least, you want to review your investment strategy again, right, at the end of maybe 6 months or maybe a year, right, depending on the horizon that you're investing in. Right, so that's it on my end. I hope there is not much question. Let me just take a look if there's any more question. Yeah, I think. Oh, there are some. So can we just invest on the AI scene and expect reasonable growth over time? I think at the end of the day, there must be a balance. I think to be fair, if I have the crystal ball, I wouldn't be here, huh? So if I know AI is gonna make money, I would have, I wouldn't be here talking about it with you guys so there is no certainty in investing, right? So it's all about balance. So again, I say set aside a certain allocation for the assets that you want to invest in, but make sure it's a balanced one so that you have some for consumer, so that gives you that balance so that your portfolio will not be affected in the event that AI collapse, right? So why I say that there might be a scenario where it will happen is because not all AI companies will succeed. Some will succeed, some will do well, some might not, right? There will always be new model as well, right? There might be a change in terms of the modeling, and it might also pose a certain risk that the government might have banned some of this technology as well. Right. I think let me pass the time to Wei Ren. We'll probably address some of the questions later on. I will ask someone to tell Wei Ren some of the questions if let's say I'm no longer around. All right, pass the time to you, Wei Ren.
All right, thank you very much, Billy, and good evening, everyone. So just let me see. Yes. All right. So, title of my topic is I've gone to some schools and then maybe you have known me, or whatsoever. But my point today is using technical analysis to actually find out what's the remaining 10% and then can help you make a better investment decision or trading decision going forward on this. It's not as unlike whatever is shared outside. You know, you can based on one candlestick pattern and then you can make the whole thing works. I don't believe that. I believe in everything works together, etc. And all this as well. All right, so a bit of disclaimer. So today what we share is just for educational purposes. Though this does not constitute any investment advice. So if you need, just look for your licensed broker or advisor if you need any trading advices. All right. So I just want to welcome all of you. So just work together, and then I know that some of you are in team, some of them you are not. So just learn together. And then don't blindly follow what we are sharing, but rather go out and find out all the resources you have. But remember, the key thing is to challenge what you read outside, and then logically ask yourself and to the the materials and find is this logical? How can you help? Trust me. After this, you will be able to have more new ideas, and that this will help you overcome your certain investment journey. Not only this ASEAN Investment Challenge, but rather throughout your adult life after you graduate school, finish your national service for the guys, and then etc. etc. All right. So just want to share with you all how I actually approach all this. All right. Simple approach to trading. It's all about strongly about confirmation. I believe you guys have heard about this thing called price action. So what's price action? Is basically studying of how prices react to certain news on certain trend, and then how it breaks out reverse and etc. All right, so that's price action. You study how the price moves. All right, so but a lot of people, as this price action is very wide topic. Many people have many interpretation, and some of them have greatly a very great deal of misconception as such. All right, so I will say that price action is not foolproof, not holy grail, but you need some confirmation. All right, so if you have heard of this thing called Wyckoff, can see this Wyckoff accumulation distribution kind of work. So if you have heard it, you can just put inside a comment in the YouTube chat. All right, but if not, I think you can Google it. Trust me, this is the thing that has been working well for the past 100 years. In the end, this actually predict the work of the crash of the Great Depression, etc. So on this as well. All right, so then moving on to the 50s, you have moving averages, you have stochastic oscillator. In the 1930s, you got Ichimoku coming from a Japanese side. But indicator is not foolproof as well, just like price action. It's just part of the system to help a trader to navigate and see through unclear clouds, but never using the main tool or the main tool or the only tool for us to make our investment decision. But rather, you need to combine price action indicators and some momentum play into it if you like it, to combine all together and complement each other. Just like how if you are in the aerospace industry, or you are studying in aerospace, you know that the whole parts of airplane, a screw part is equally important. There are 200,000 over parts in the Boeing or Airbus airplane. Any parts is missing, any parts of this, the plane will be grounded to fix it. All right, then you got your minimal equipment list that shows that you need all these criteria to move in order for the captain to start flying. All right, so if you are from aerospace, uh, if you study aerospace, your course in aerospace, you will have no need. All right. Okay, so all right, so before that, I have an approach. All right, I use a top-down approach. All right, so I come from a very big background to from macro all the way to small. So what is the top-down approach all about? So I use this approach called chart, news, and then chart. So what do I mean by that? So particularly, I will go to the chart or a major index, and I will see where's the price, uptrend, downtrend, ranging. What's the long-term trend? Long-term, what's the 5-year trend? And then what's the 2-year trend? And then what's the 3-month trend in the quarter? And then I'll start to know, okay, is it dying off? So once I know that, maybe it's topic, so I will go into seasonality. I'll find out what's the macro news that affect. So your non-farm payroll, your GDP outlook, GDP not much, but it's good to know. And then your consumer sentiment outlook as well. And then you will need to know your monetary policy, such as your Federal Reserve decision. What's the are they QE or QT? Quantitative easing or quantitative tightening? How is the money supply out in the market? Are they doing repo market? This is very important because repo market will affect how the liquidity is between the Federal Reserve and the what you call it, and the financial institution in the US. So AKA means that where's the money flowing in, or is there any tightening of the money as well? All right, then from this, you need to do some psychological assessment. Why is this happening? All right, what causes this? And then with this, you can multiply not only the US, but Europe, Japan, and the major G5 currency. You can use FX as well, currency movement, like if dollar is weakening, and then you have to see which of the currency pair is strengthening that much against other of its peer. So for example, now rupiah and Thai baht is strengthening against the dollar. Not only that, I think it's strengthened against the euro, the pound, and the Aussies. All right, so it means that there are major developed economies, their funds, part of it are flowing into these emerging markets. So that's why you can see the set. I think Jakarta Composite Index is doing very well today. All right. So once we find out the major news front, we can start going to a chart. Geographical analysis, which I mentioned earlier on, which country is leading? TAIEX, KOSPI, Nikkei 225, or KLCI. So Nikkei 225, recently for the start of this past week, it has been well performing, breaking above 42,000 and probably 43,000. Today some correction, but not a surprise. I didn't see any strong sell down, so likely the uptrend is still ongoing for this level. All right, so after that, we don't focus on equities. So we need to branch out other than that. So intermarket analysis. So you talk about how the flow of money is in like. So because there's one thing, large fund institution players can't hold cash for the majority part of holding. Depending on the mandate, some clients I work for, they have how do you see how do some mandates they can't hold 3%, they hold 5% of cash, and then some they cannot hold more than 10% of fixed income and etc. So they have excess cash, so they will have to rotate out to the next, be it FX, be it commodities, be it some other high yield fixed income. High yield means the junk bonds, all this, to gain a short-term alpha on that. All right, so and then after that individual class, then we will see that what I mentioned earlier on that what is the play. All right, so this is in play, is it Euro, USD, JPY, all this, and then some commodities like your wheat or maybe back. All right, or hard commodities. Recently, hard commodities goes up. You got because steel, nickel for construction, etc. So with all this information, you can go into the equity sector. So like which one, tech, energy, and etc. on this. So, but right now, I think with AIC challenge, we will focus on equities and sector rotation as all this as well first. All right. Okay, so next one. All right, so this is one of yield curve. One of the example like yield curve inversion, and we'll talk about how market will correct itself. But recently, I don't see any market have any major crash, but a steep correction in April, from Jan to April for 3 months, and then after that, market is back to a new all-time high again. So right now, I think this we can say that the threat of bear market is likely to be over for now in the near term. So we can expect some sort of like based on this deduction, we can expect market to be risk on again and then making a new high. But tonight there's PPI. So if PPI come in hotter than expected, then market will correct. Why? Because this may threaten the Feds to cut rate in September and maybe in October as well. So we have to see how and then how Jerome Powell has to react to it. So these are all the things that we are looking on for this. Okay, so asset rotation. So I believe that those who study business and you know that everything comes with cycles, so business cycles. So this is gauge, not an absolute thing, but you need to question it. So for let's say when market go into correction, heavy sell down correction down, why bonds actually goes in, because bonds are risk-free assets. All right, treasury bonds usually risk-free, so they will go into risk-free, they'll park the money to be safe, to get some returns over the short term. And then after that, when economy happen, when QE comes, when if you know about Keynesian economics theory, you know that John Maynard Keynes espoused a fact that government should intervene during a recessionary pressure. So they'll flood the money with a lot of fiscal policy. More roads will be built. More money will be flooded into the stocks. So that's why stocks will come up. So stocks like industrial, stocks like tech, stock like energy, this will actually prop up. And after that, others economies will other sector will come and pick up and then bring up the bull market. But as when the market repeat topic, then bonds will likely exit a phase because people are jumping in to be risk on and then pushes up the market high. Right now we are at this stage right now. So after that topic, there's no more demand, stocks will start to correct. And then if there's no more demand, and then there's like certain financial risk, and then like example 2008, Lehman Brothers corrects and then collapse, and then it caused the market into free fall, and then whole this cycle are moving. So currently we are stage 4 around this part where bonds actually has gone down because of yield has already recovered a bit. So commodities and stocks are actually moving in tandem right now. So we are around stage 4 on this. All right. So you can see stage 1, stage 2, stage 3, 4. You can take picture of this. All right. So yep. Okay, so this is basically one chart that shows how asset rotation do with business cycle. So first part is the yield of this. So yield drop. You can see that yield has been flattening, drop, and then while the S&P 500 actually start off a steady bull run since. All right, when you reason a lot means that people are actually shorting the exiting the market. But right now, bonds, equities are not, the commodities index are not up yet. So we have to see what's the next move going forward again. All right. Okay, so sector rotation. This you can plot out a chart using TradingView. to see which one is the leading even during a downturn. Okay. So sector rotation, there's one you can use which I find very useful free of charge as well, is under stockcharts.com. You can type you can Google using relative rotation graph and then bracket RRG on this. All right, so RRG, the name suggests is you can improving leading. So leading is which means that the stock is actually moving very fast, and then once it peak and then correct itself, you have to see whether it make a U-turn. If it don't make a U-turn, means that sector is gone. It goes to weakening, means that it start to show correction. All right, but does it still have chance to go back in? Yes, certainly yes. You can see that industrials during this period, example, actually goes back up again after that. All right, so you got this, or XLP is consumer staples, from weakening goes all the way down to lagging and then go back to improving. So there's chance that XLP is bottoming out again on this as well. All right. Okay. So I quickly go through because I don't think there's much time as I go through a trend following strategy. So key pointers and characteristic of trend following system. I think that is very easy to use, safe to use, very much widely espoused on is because trend following strategy actually see the larger picture, all right, by the winners, all right. Like Billy used an example of Microsoft earlier. So would you want to buy Microsoft, or you want to buy some companies that you never heard of, which have a weak trend, large drawdown correction or something, etc. What Apple, Microsoft, all these large caps, their steady flow of business. Even you don't understand a business that well, you from the glance of chart, you can see that there's steady uptrend. So any price you buy, you will likely result in a winner. All right. So what are the cons to that? So it's subject to whipsaw, and then market can be in a very extended corrective phase or sometimes extended corrective phase, like what happened in 2022 or in the early days, like during our daddy mommy's time in the 70s. All right, so 70s are when they are just born, where there's a massive correction ongoing. And then if the corrective phase still go on and then they may extend further downside, it means that with the major trend still ongoing, 10-year trend still up, but because of this 10 months to a year correction, you may suffer a drawdown for this period of 1 year. All right, this will affect your psychology, this will affect your emotion as well. So there is so in order to avoid this emotion drawdown, there's one thing you must manage is your risk management. So let's say your asset allocation, how much you're going to allocate to this particular stock. You think that Microsoft is going to go well, but as it's approaching a high, do you want to risk 100% buy at a high, or do you want to risk 10% buy at a high, or wait for a pull, and then when the pullback you can average down on this? All right. Okay, so type of trend following system includes moving average system, breakout system, pattern recognition, and just now what we saw intermarket analysis. So there is these three. Moving average system, there's one more, it's called a trend line system, which I'll share with you all later on. All right. So with trend following strategy, I think this page that I think that please take down, because volume is very much a very key indicator I use to confirm the trend. All right, so so the question is, what is volume? So volume is actually the result of a buy and sell transacted, official transacted will result in a full volume. Means that buy and sell, and then once they transact, it will be 1 volume or 10 volume going forward on this. All right. Have you all heard of this thing called spoofing? So it means that if price rise very parabolically, but volume does not match, or volume remain very low, lower than what is it, then there might be a chance that it is spoofing. It means that prices are catching up to the buy limit set by the big players. All right, so it means that let's say I'm going to set 100,000 shares to buy at $100, which is very far-fetched. People are just the market is trying to match because there's no selling order yet. So, but as it approached that, it will take off the order, and then that's why the volume did not catch up, but prices are still catching up. And then that what follows? Maybe a strong correction because nobody to fill out the demand over there. All right, so you really need to check how strong the volume is. And then another thing is high volume bar at the top of the trend means at the very top of the trend, and then very strong high volume. Then you'll be very careful because this means that there's been exhaustion. So there are various ways to interpret how volume works. Oh, okay. So you can take picture of this, and then if there's any question on volume, you can ask me, and then if there's time, we can do some live chatting all together. Okay, so trend following, I think one is the best move is using moving average system. So very systematic way to chart the trend. In fact, you can use it very quantitatively. Let's say you are very good in programming, you can just say, I will only buy stocks when it's above 20 and 50 EMA, and then I'll just buy it, and then write the trend all the way up. Very basic and very widely used by many. Include a lot of quantitative funds. They use this very simple approach on this. All right. Easy to use, and it can incorporate multiple periods. Just now I mentioned 20, 50. You can go 9 and 10 as well. All right, short, mid-term, and long-term. Type IMA is simple or exponential. Exponential is what a lot of people they are using because it factor in the lack of dropout, but both of them actually do the works. So it depends on what you like, and then you just go for it. All right. And then there's something other than moving average, there's this thing called support and resistance. A lot of people they like say, wow, support and resistance is magical. But I beg to differ, they are not magical, but a lot of things is due to human psychology. It's a very herd mentality things. I think technical analysis, a lot of people saying is outdated, is voodoo. I beg to differ. So I think technical analysis is a very adaptive market hypothesis. So in another school of thought, there is this thing called by Eugene Fama. It's called efficient market hypothesis. It's called EMH. So it means that no public, there's weak, mid, and strong type of EMH. I shall not go into it, but basically it means that nobody can beat the market. But adaptive technical analysis adaptive. Why is because it factor in how human psychology works, how people actually see the things, and then and etc. on this. All right. So example, if everybody if the previous there's a previous trust, and then break up above the key resistance. That resistance is actually a new support. But why people were willing to buy that? Because or gravitate price will gravitate to near or to the support is because of the herd mentality. All right. Okay, so on this, I think we just like to do a live chatting if it works. But if you have no time, you just feel free to email me because I have the email attached at the end. All right, so lastly, I think you can use this as my checklist, but my checklist is a lot of indicators. Then people will question me, so why so many indicators? I thought less indicator is better. Okay, so it depends on what's your tool. So I break up into long, mid, and short. So every indicators I use like MACD I use for long-term, stochastic I use for mid-term to catch the major the mid-term overbought oversold signal. ROC is just to say it's the daily strong. So if these three are strong, then I will just move in on. Then directional movement, that's not oscillator, it's just to check the strength of the trend. Is it topish? If it's topish, how's the correction on the price chart is is a very weak kind of pullback or correction, like forming a bullish flag. Then I think that is I will add on to a position on this as well. All right, then bottom out trend continuation or reversal. So for fundamental part, this like what BD explained is very good. All right, is the macro a healthy sentiment? That's a major macro news. Valuation, is the valuation good? So what is the example of valuation? Like how's the PE like? Is it cheap, expensive? Is it near first standard deviation? And then observe how the price move as well. All right. The market cap of companies, the larger the better, because you do not want to buy micro cap companies that if you are going for a long-term investment. All right, then how well do you know the sector of the company that is in it? All right. All right, so I think that's all for my sharing. I think while I check, is there any Q&A? I think there is on this. Before I answer, this is my email, so if you like, you can email me if you have any question, but I guess. All right, so how does this information determine how we read the market? Okay, so if the information is refers to my top-down approach, yes, it do affect on how I read. All right, everything I will have, everything is from the chart, and then I need to have the macro news to support my backing. All right, so if it's an uptrend, like example, the US market, between the Dow, S&P 500, and the Nasdaq. All right, Nasdaq leaked, and then S&P 500 also have broken new high, but Dow is the one that's lagging. It means what? The institution are not actually going in because the Dow actually is all the large caps of the large cap, the very much blue chip, and then they are more price weighted. S&P 500 is more weighted on market cap. All right, so they have a lot of weightage. There's allocation on this. That's why you need one. That is the one that leading. So Nasdaq 100 is actually leading it. So if the Dow can break a new high today, provided the PPI is good, without any strong correction, I think by mid-September or late mid-August and late August, we are likely to see a breakout to a new rally, and then by September triple witching period, we might see a softer correction on this. All right, I hope that answered your question. All right, so is there any other question? Let me check. Okay. I think there's no much question on this. Any more question? Before I pass my time back to the host. Let me see. Okay. Okay, if there's no question, I shall pass my time back to the host. Okay. I think okay, just office. Okay, can sure. Then I think if that's the case, I shall see you all again for the next evening session. If there's a chance. All right, but BD will be your main coach. So anything feel free to ask him over the next